And we are live on Oz Property Investor. We bring the big names and we have the suspense for the start. Have the big fun. Everybody, it is a huge session. Perth has been probably it has been the number one performing market 2023, 2024. Don't fact check me because I didn't actually look and see, but it was definitely top 3. So it's huge sort of market. It's been the talk of the town. Now, is it still there? That is what we're going to unpack. But not only that, what does the future hold? Because I'm excited because you are a 20 plus or close to 20 years. Is it 20 years, Jarrad?
Yep, it's over 20 years of personal investing. It depends whether we count when we started researching on the Somersoft Property Investment Forum at 16 years of age. Does that count as well?
Wow.
Back in the day?
So, no, it's a big session, but importantly as well, selling, because it's a talk of multiple property markets as well. So, because I think, Jarrad, you're saying there is a magical number that you need to outperform. And we'll look at that number as well, because I think that will really illuminate for some people if they're going to enter and exit markets sort of quickly, what that looks like. But Jarrad, how are you going?
I am awesome.
Yeah, you were telling us about how good ChatGPT was. So you've revolutionized everything.
I love ChatGPT as far as research goes, but you definitely need to know how to interpret it, don't you? Because you can go down rabbit holes otherwise.
Yeah, it's funny. I have like questions that I ask it. If it just goes to your bias a little bit, like, what is this?
Yeah.
Like, tell me about the pros of this, and then it just like goes all off the pros. But like, if you're discussing the con, like you want to understand the cons, you need to say, "Great, tell me all the cons." I see people just saying, "Tell me about this agreement," for instance, and it will just So
it wants to make you happy, doesn't it? And when I see positives about Perth property, I get pretty happy because of the amount of properties I own here.
Exactly.
Yeah. Well, this is one of the questions.
Anyway?
I'm good, mate. I'm good. I'm excited to get Jarrad on because Jarrad is a real estate investor. He is a real estate agent, a property manager. Like he's doing everything in the property space. And should I sell my property? Every time you ask that to a real estate agent, the assumption is, maybe you should. Actually, now is the best time to be selling. So I'm going to be interested to see what the answer to this question is in the Perth market. But
he's also a property manager, though, Joe. So you really want to sell, because that is where. But no, so there is a balance into the equation. So Jarrad, it's going to be a huge session, and I even managed to get you to commit to potentially talking about some areas of Perth. So if you want to know about, I did ask that question. I didn't take the suburbs. So you might, if you're watching, you have to watch live too. We reward the people who watch live and comment. But if you're watching in the replay, also let us know. And I'm sure Jarrad will get in there. So without further ado, though, Jarrad, for those who haven't seen you floating around, you've got the engineering background. We seem to have a lot of property investing engineers. You've got that experienced property investing hat. You are a selling agent, and you're the go-to for Perth property market strategies and award managing across 200 plus. So we said, is that 201, 202? How many suburbs is that? So I won't get you to tell us that because there's a lot of suburbs out there. And you've also got the Perth Property Insider podcast, which is great for giving those insights, and it's the inside word. It's one of the must listen to if you want to know about Perth. So, and the thing I love about you is you've won the top influential business people, but you also give back. So you spend time with teenagers for the Smith family, Zero to Hero. So that mentoring is really big for you, not just in your business, but in your personal life. So good on you. Yeah. So first question I want to know is, we're going to share lots of things about insights on Perth, but what's currently sort of going on? What does it look like? What's the word on the street in Perth? Is it hot or is it not?
Big question. Big question out the gates.
Well, it's definitely been a hot winter, and I don't say it lightly. So what was pretty much been happening this year is since September, October last year, we hit a bit of a peak and things started to cool off, no doubt. Like all the numbers were cooling off. Real estate agents are wondering, geez, I forgot how much work it can be to sell a property. Like we're not getting offers before the first home open. We might have to actually go there and do some work. But I'm always about getting the best price for the owner and doing a bit more work than the typical agent does. But it was definitely cooling off, and I was looking ahead to what's the underlying fundamentals, what's the reasons for this cool off. affordability was biting hard, not just in Perth, I think, too. Joe, I mean, you probably have seen it with your buyers agency side around Australia. Things have been, interest rates were getting to people, cost of living was getting to people. Prices had got to a place, not just in Perth, but pretty much across the country where, the gap between interest rates and rental returns was growing, so harder to hold a property.
Yep.
And it was starting to grind it down. And then we had the state election. So everything pretty much goes on pause while we're waiting for the outcome of that. I don't know why, but I've been through a number of state elections, federal elections now. It's a given that people, just with the uncertainty, with things being in limbo, what's going to happen to, different state policies, what's going to happen to on the federal level. And we had those two elections that just halted things.
Yeah. And you had the third Labor, is it the third term of the Labor government that happened?
Yeah.
It's
so
really
Labor got re-elected here.
Yeah. Typically, sorry, go.
Yeah, just going to say that, they've been doing a good job, and I've sort of traditionally been more of a Liberal person, but, you can't argue with the job that they've done for WA. So it was pretty electable. It was a bit of a landslide in the end.
Yeah, just on that, because I know that we don't talk too much about politics, but I think it's sort of because are they sort of slightly really benefited from what's happened in mining? Yes, we sort of, that's a cliche. Yeah, that's all. Yeah. So have they been off the back of the resources? So would the type of government been in Liberal Labor, whichever these days, would they still have done pretty well anyway? Or is it good economic management over there?
Look, they did have a lot to work with, but thankfully they haven't done too much to disrupt things, and particularly with the property market too. I mean, we look around the other states, we've had Victoria have their horrible land tax that they're putting onto property investors and really putting property investors off. We've had the Residential Tenancies Act getting really twisted up in Victoria, as well as Queensland kind of going that way, but Perth has been sort of kept more business as usual, and I think that's also helped the attractiveness of property investors and just the confidence factor, I think.
Yeah, it is amazing how much legislations and rules change the ability to purchase property, and who is favored and who gets the best end result. In WA, buying a property is very much kind of like buyer beware, caveat emptor. 99% of the contracts don't have a pest and building that you can just walk away in. In Queensland, for instance, you can just get a pest and building, get the property under contract, and you can just walk away under the pest and building. I don't really like it because it has that get out of jail free card. Obviously, this is not financial advice or legal advice. Depends on every single contract, but 90% of the clauses in WA don't allow you to buy, which sucks for property
There's no
investors.
cooling off period either, which people
great point. No
I'm walking. So I'm not cooling off.
You buy that thing, but it's that's really sucks. I hate that about WA. No cooling off period. You can't do that. But then when you own a property there, it's the tenancy rules are let's just think about this logically. Let's not go crazy and let people just smash. In Victoria, some of the rules are you have to the tenant can repaint the wall if they smash put picture frames up. So they are allowed to put picture frames up with nails and they can repatch and paint. But then it's but is that patch and paint actually good? Well, I painted the patch. But it's but that paint is not the same paint as the rest of the wall. Whereas in WA, it's just no, you can't do that. So it's interesting where sometimes it's really difficult to be in one state, and then the rules on the other end are awesome. So it's I don't think there's a one resource to kind of give investors an idea of the pros and cons. Hopefully, I guess these conversations help a lot with that. But so I guess the biggest,
we're getting our Residential Tenancies Act looked at again in the coming year or two, probably over the next year. So they're going to try to keep taking it more in that direction of tenants. And hopefully the biggest one I want to keep is the no grounds termination, because at the moment we can still end a lease for any grounds, and that really sucks in Victoria, where like you basically don't have control over your own property to a certain extent. So it's becoming much harder to just finish up a tenancy. And that's a big one for me.
It's a massive one. That is a bloody massive one. Because if you want to do a big renovation and all of a sudden raise the rent by $80, you might not actually be able to do that. Not to story Victoria.
As investors, it's best to focus on big picture. We're trying to create wealth. You work out the details. You get good property managers to handle those. And that's what I do with my properties in the other states as well. So don't get stuck on that as being a roadblock.
Well, what are the kind of yields that, as an investor, like I know that prices have grown, and for the new people, it might be worthwhile talking about like what yield compression is like as prices rise.
Well, why don't you chuck up my slides? Because we'll start sort of high level and start to drill down and really unpack this.
Okay.
So our median house price now is at 780, and that's grown by 120 odd K over the last year. And you can see there the unit house prices also started to gap up a fair bit when it was very flat prior to that. Prior to 2024, it had basically done nothing over the preceding period. So we are actually, a lot of clients are buying villas and units with higher land component, especially if they don't have the funds to get into a house now. So that's been interesting.
So what is the reason for that? Is the affordability aspect, like what you were talking about at the outset?
Yeah. So it's really getting people, if you've got 600K to spend now and the median house price is 780, you're really looking at more of a villa or a unit to get into instead of a house now. So to get something decent for a house, like you're really at sort of 700K plus. There is stuff in the 600 to 700K price brackets, but you've got to be a lot more selective now. Whereas you can see, a couple of years ago, you were picking stuff up. A lot of investors bought things at 450, 500, 550, and they've now done very well. So that's why people are asking the question, have we peaked? Is there more ahead? And a good time for us to go into those things.
Can I ask a controversial or what maybe seem a controversial question, because, and you may not necessarily have an opinion on this, but I'm sure you've been asked or thought about it, the Sydney versus Perth comparison. And not to compare the two cities, because I think Sydney's probably a touch better. People are going to argue Perth's better, but anyway, we'll split hairs. Like Perth has its advantages, but at one stage Perth was the most expensive in about 2008, 2009, and now you're looking at a Sydney median of about 1.2, 1.3, give or take, of a dwelling, and you see Perth around that sort of high 7s, low 8s, depending on what you look at. Is there a path for Perth to ever recatch Sydney? Because to me, that's what I want to sort of think about, and then we'll dive into some more micro concepts. I
don't think we'll ever catch Sydney. There's a lot of economic, there's some really high-end jobs, some really, we've got a very high average income here in Perth, and we'll compare the incomes across the capital cities a bit later when we talk, and how that relates to, I think, showing, what buyers can afford to pay more and where. But I think, just with the way that Sydney is, like, I'd be very surprised if we ever catch them.
Yeah, I'm glad that was your answer, because I was a little bit worried you would have been like, no, I think Perth is going to, do it. And that's kind of why I wanted to get you on, and Jeff wanted to get you on, because it's like, cool, there's no bullshit here. Just tell us, show us, let's talk to the data. Let's show us some of the reasons why. And if you don't think something's true, then you just tell us as it is, because it can, we're always very cautious.
I think Melbourne should be placed above Perth longer term as well. I'll just put it out there.
Sorry, Perth.
It's relatively good value, but Melbourne's got a lot of problems that it's going to have to get through in the next 2 to 3 years before it reclaims that spot, I think. So
yeah, well, it's like the way property works, right? Is it soaks up the economic value of the area based on the supply and the demand of what properties are available, right? So the economic activity of Sydney and Melbourne is absolutely massive, and now the supply is starting to shift and change as well in the Melbourne market and the Sydney market as well. So it'll be interesting.
And
to
the
see
population growth to both of them is really what continues to fuel them as well on the demand side. So we'll touch it. We'll look into. I've got the population growth stats as well that we can go into in a minute for all capitals.
Okay, can we do that now?
Yeah. Well, unpack it.
Whatever the next slide is.
Let's check out our next.
What has he got loaded?
So okay. I found this interesting because over the last 3 months, Perth has done very well with a 1.6% growth rate there.
Sorry.
And so Darwin has been, has taken over in the top spot. There has been a lot of investor activity from what I've seen heading up there, and to me, it's very speculative. And boy, I wouldn't want to go and ride that roller coaster ride myself. But if say it's one property out of a whole portfolio and it's not all your eggs in that basket, roll the dice. But and it is so undervalued. It's been down in the dumps for ages, hasn't it? So
yeah, if they can work out jobs, like if they can get more jobs there, and it's going to be very, very well. It's going to be very interesting. I think the Jeff and I are talking for the. So I don't know if you know, Jarrad. We have the Oz property portfolio where we buy investment properties and just show all the people the good, the bad, and the ugly of property. And you kind of say like, oh, if you have the speculative portfolio, maybe go for one of those type of deals. Darwin may have a deal in the Oz property portfolio, but I do think that it is very much a speculative. It is a speculative bet. I do think it is going to do incredibly well over the next. It's not a long-term buy and hold where you buy a property and it goes consistently up. Like you would expect, it's going to be. I imagine it's going to go boom, 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 boom. It's going to bounce around
don't rely on it being your only, nest egg.
Your only egg. Yeah, your only egg in the basket. Yeah, that's a good way to put it.
Those things are true. I remember you 9 months ago, and I was telling you 9 months ago. But anyway, it's all right. We're not going to get into that. So you've got some.
What we were looking at there is that Brisbane and Perth have both done very well over the last quarter, sort of rebounding with 1.6% growth. And that's been the next two highest. And Adelaide's continued on probably longer than everyone's thought, and so has Brisbane. And that's kind of just gives, I think, Perth more runway the longer that these two continue on as well.
Adelaide's kind of like that Hobart, right? Like back in the day when Hobart was going on a tear, everyone was starting to pull out of Hobart and say, no, it's done its races. It can't keep up, but it just kept storming on through. But it's that's kind of like what Adelaide's doing right now, where it's. But I still see value there. I think if you can pick up a good deal that has subdivision potential and you can eventually split it, you're not going to go too wrong. But same as everywhere, right? Like pockets within pockets. Deal dependent.
And I was surprised to see the index for Melbourne tick up by that much. I am seeing things pretty hot in certain segments over there as well. But I was surprised to see it at the median, at the sort of price index level, nudging up by that.
What do you mean the 1.2 at this price?
Yeah.
Not showing at the high level yet.
Yeah, the next quarter that you see is going to be like this next snapshot for whenever they release this is going to be very interesting for Melbourne. Like the data's not.
I think it'll be about the same, Joe. I think it'd be boring. I think you need to it doesn't and that's why you're still seeing Adelaide and Brisbane still starting, because they're just trending down. There's still some growth there. Like it's a property market is a very slow moving beast. So I don't suspect you'll see double digit growth annually in Melbourne until at least 2026. But that's sort of then the lagging sort of thing. So right now is probably the sort of thing where it's almost not peak FOMO, but it's starting to get to that stage. Back to Jarrad.
In Melbourne, peak FOMO.
Well, as in the content, like every second YouTube clip is talking about Melbourne now.
Yeah.
It's like, okay, which parts, and a lot of questions in the Oz Property Forum. But we're back to Perth, and has it peaked?
Anyway.
While we're talking to this
keep
show,
in mind, like, I reckon it's worth making this distinction at the moment, that the digital horde of investors that kind of move around, and they're typically, from what I've seen, in the sub 650 price points. So they do have a big influence on markets when they go into them.
Yep.
And, what I'm going to talk about today is the other things that are driving our Perth market and what's going to support growth in the next phase, because investors were super active up to September, October, but then since then they've really pulled out, and we've gone from getting, 5 offers sight unseen on every property that's sub 700 to now maybe having 1 or 2 want to walk through video and, still inquiring, but not, the horde's more or less pulled out of Perth. There's still investors buying here, but the horde is probably up in Darwin at the moment. I don't know.
Yeah, it goes to that affordability aspect, right? The other thing that I find quite interesting that it's kind of mentioned a little bit now, but there is a lot of there's a lot of people looking at a lot of data now, and there's a lot more accessibility to data, whereas it used to be, I'm an investor. I'm reading them, like when you were back in the day, Jarrad, you're 16-year-old, you're reading the magazine and it's just got the yield and it's got the price and it's got the rent. And you're like, oh, well, I may as well buy here. And now with the access
I was so
to data,
excited to go to the library and get access to the median growth data of what's happened over the last year. And like that was like cut through, revolutionary, back of the magazine, or you'd have to go and subscribe to Landgate or something and, get access to the data. And it was like a full-blown process just to get anything.
Yeah, basic stuff. But that's now all changed, right? So now everyone's becoming more sophisticated, and it's now what it's doing is narrowing investors' focus. So now instead of having 10 people buying in 10 different locations, it's now 10 people buying in 3 locations, or concentrated into a more educated answer, which is then putting a lot of strain on these areas that don't have, like Darwin, for instance, right? The population is far less than it is in Townsville, and all of a sudden it gets this massive amount of attention.
Yeah.
I mean,
that's why I think you do need to think about the medium and long-term fundamentals for an area too, because as we'll talk about a little later in the show, the true cost of selling and the returns that you need to, get just to, every time you sell in and sell out, like if you're in a pump and dump area, you might not have no choice but to sell out just to protect yourself. So you really need to think about that when you're going in as to how long your hold periods is, and, are you in this for the medium and long term as well? So.
And that's the hardest thing as a property investor, is to see some opportunities that are like, yes, I can see that this is going to go absolutely mental, but I know that I am a long-term buy and hold investor, and I want to hold this property for the long term. So yes, I want a short-term bump up for the next 3 to 5 years, but I also want to know that it's sustainable in 10, 15, 20 years. Have we still got that long-term capital growth?
And that's exciting. So the exciting part is buying and selling and getting into another, property, but it also takes a lot of bloody effort too, It
used to for me. I mean, maybe I underestimated, but I have bought property for. I think buying property for other people is harder, because for me, I only have to satisfy myself. When it's somebody else, it's then, and doing that is quite challenging, because then you need to factor all these things in. We've got you gave us the Heron Todd White, the HTW. It's called some interesting things out there in the media. And even on our Facebook forum, it's called something other than Heron. So you can predict what have a guess what it's called. But because I find it jumps around all over the place. It also starts with a H. But so where is Perth on that one? And what are we sort of reading into this macro? Where is Perth?
Look, I definitely take the property clock with a grain of salt. But the reason I like referring to it is that it does become a bit of a self-fulfilling prophecy for a lot of investors that reference it. So not everyone's deep into data analytics and data prediction like Joe and I are when we're looking at, the most advanced tools. Many people just go off of, if this is a rising market, I'm putting my dollars there and it's a good bet. And when we hit peak of market time to get out, and many people, part of following the clock is that you also, if you are going to get out and you wait till it's peak, you're not going to get your premium price necessarily either, because by the time it goes around to peak, the heat's come out of the market and you're not getting an emotional price from people pushing stuff up. So it works both ways. But I like to use it as a grain of salt. And Perth's still around in the rising market. I found it really interesting this month. They put Sydney in a start of recovery. And I think that's a bit premature.
I can't take this seriously. Like I'm just looking at the bottom of the market, the Illawarra, and how can you we're talking there's hundreds, similar to Perth, there's hundreds of suburbs in Illawarra, maybe not hundreds, but at least many dozens. And there's price range is like a big capital city between sort of 700 to many multiple millions of dollars. So it's hard to, and I suppose they do their best, but I don't know how you could say days on market in my particular area is low 20s. So I'm like, how is that then? And then how can you classify Melbourne's declining but Geelong's at the bottom? I don't know. To me, there's kind of some push pull, and then Mildura is at the peak. I don't know. I mean, yes, they're geographically located away, but yeah, I find that interesting. And they've got Perth at a rising, not and approaching the peak or the peak of. So they're saying it hasn't peaked.
Yeah, that's what they're saying.
Don't sell, maybe. I'm not saying don't sell, but yeah.
That's the message they're putting out there anyway. But I think you definitely have to look at your specific suburb whenever you're buying, whenever you're selling,
Yeah. Yeah, absolutely. It's interesting. It is an interesting point. It's amazing how many areas that are on there. And then like you look on the declining side and there's like 2, 4, 6, it's like 8 on this side. But I mean, it's not, these markets have gone incredibly well. So it is a fair state to say. But I guess what I'm more interested in is in how, what is the data behind this kind of stuff? This is kind of answering my question around the yield side of things.
Yeah, I thought this was worth referencing. Because that's pretty attractive in Darwin at the moment at 6.6. There's a lot of risk there, but the yield prices have just, really gotten down, and rents have gone up, and that yield's looking, pretty up there. But Perth's still holding its own with 4.3%, and that's sort of on par with the second strongest still across Australia.
So how is it? Are you seeing that? Like, we're going to talk about market segmentation, price range rise, where we're looking at, the 500 range, which, it doesn't exist anymore, but like 600. Like, where are the? We've outgrown that. It's crazy. Yeah, Jarrad is a real estate agent, right? And we were buying property back in Perth like a little while ago, and there was amazing deals that we're just like, oh my gosh. Why did we turn these deals down? Oh no, Jarrod's like, no, you need to give me $5,000 more. And I'm like, no, there's no way. There's no comparables that stack this up. There's no way I'm going to give you $5,000 more. I'm walking away. And you're like, dude, you're being silly. I'm like, no, there's no comparables. So then, 3 months later,
then it goes up $300,000,
up $50,000. Okay, right. A year later, it's up $150,000. But are you seeing the more affordable? Like, is there still a 5% yield there? Is there a 5.5% yield there? Different price ranges. This is obviously an average of all the states and stuff, like all the capital cities. Like, what is the typical yield for a typical price?
Well, at the sort of median around the 700K, we're typically getting. We can still get 5% on a lot of stuff, but it is more moving to the 4.5% yield. So lower in price you go. When you're sort of sub 650, you're definitely getting the 5.5. You can get the 5.5 on some, but 5 to 5.5 sub 650 on the units and villas. Like, that has really moved up to more 6%. And even with strata fees, like, you're being left with a pretty good net yield on villas and units now. So that's attracting the investors that don't have the dollars for a house. for sure.
Yeah. And if
It'd be
you're an
interesting
investor,
to see.
sorry, go, Jeff.
I was going to say, it'd be interesting to see because you have seen a bit of an increase in those units and townhouse markets around the sort of even the affordable pockets of your Gosnells and your Rockinghams to some extent and your Armadales, which has sort of followed what happened in Brisbane. Like you saw Brisbane house prices close to double in not every suburb, but the more affordable. And then you started to see the unit and townhouse, mostly the townhouse sort of thing, as they started, and then yields started to compress in those townhouse areas as well, because people were like, I can't buy a house for 800,000, or investors like, there's so much value at this 300,000 or 400,000, and then it just they were like, the yields on this are 6% or 6.5%. So it'd be interesting to see what, but it was just crazy to see that 4.3%. You were looking at close to 6% sort of yields over in Perth at the start of 2020, 2021. And now that's
crazy
just
look back at that and what we were getting loans for back then too was so much lower. Like,
and have you seen, have rents stopped rising? I think they probably would have stopped rising have you sort of started to see a ceiling?
Definitely slowed, that's for sure. And we are still we're at 685 now on the median rent. So it has continued to nudge up again over the last 3 to 6 months. So there is still increases, and like on our portfolio, like everything we leased last month, we were renting. Our average rent was $710, and that's sort of a bit more reflective of like what the typical properties are getting. So yeah, it's continuing to edge up on rent, but it's very area. The biggest thing to take away is that everything's a lot more suburb specific now, both on growth rates and rental increases and vacancy rates. So previously you could chuck a dart at the board and be blind and you'd still hit something and you'd still get a lot of growth on both. But now you have to be a lot more selective.
We're getting into the fun part of the show, the predictions, Joe. You want to? There's a lot of words on the slides, but you even put a percentage. That's a bold move.
He's even gone with the percentage. Okay, well, let's just run to our first sponsor. We're going to then go to market predictions, where things are going, and then breaking down the market segmentation of different price ranges. So,
if people want to hear about suburbs and these segments.
Oh, Jeff, I wish there was 3 investing books that covered everything property.
Oh, Joe, there is. Steve has 3 books now.
That I do, guys. I've got 3 books now. You probably don't even have to follow this group anymore. Just kidding. You want to keep seeing and hearing from me, of course, so stay involved. But in all seriousness, if you want to get the full picture of investing, residential, commercial, and development, these 3 books have you covered for the fundamentals. For OzProp members, here's the best part. I'm giving these books to you for free. Just cover the postage and I'll send them right to your door. Go to policeyproperty.com or click the link below and get your copies today. You can also get all my spreadsheets, checklists, and resources free on my website. Happy reading, gang.
And we are back. So it looks like people want to learn mostly about north of the river. Well, there's a couple of comments. So
north of the river.
Definitely. Oh, well, Morley, where that's kind of in the middle, is it? Would you say that's north or?
It's north.
Why is Matthew interested in Morley?
Yeah, and then there's Kennington, which is actually just south, isn't it? If I'm
southeast.
Yeah, close enough to north though. But no, so there's the market segments here. Talk us through. There's a few words on this, but how to slow down in the 700K. What do you think drove those slowdowns?
It was really the affordability, the 2 state elections, and then things have kicked off when we got the second interest rate reduction in May. So that's really heated things up again after that's come through.
Sorry, what? Hang on. I feel like we just shifted. So it's been slowed down, and then now the affordability aspect from an investor standpoint of what cash flow they're going out has started to turn the market back on. Is that what you're saying? Under 700,000?
Definitely under 700K has picked up again over the last month strongly.
Yeah.
And it's first home buyers that are picking up from the investors that have slowed down.
Oh, gotcha. Because there's a new, I don't know if it's new actually. We don't deal too much like first home buyer grants. Like as investors, we kind of don't use them.
Probably not on our radar.
It's not on our radar. It's not really on my radar. Okay, here we are. So what is the first home buyer grant? Like how does that affect the market? Is there a cap that it has? And then how should we think about that as investors?
Well, it's making a huge impact already, because first home buyers cap on the transfer duty, which is stamp duty, used to be 600K. So when I'm selling a property that was at 590, I'd get offers and they'd stop at 600, and I'm like, you need another 5K to beat this person, but people walk away just because they don't want to go and pay full duty, and they want the concessional rate, which is basically part duty that they pay instead. So what the state government's done now is they've changed the threshold to 700K, and you get full exemption for 500K on a property purchase. But that is pretty much going to increase every property that's got a 6 in front of it to having a 7 in front of it very soon. And that alone I'm seeing it really driving the market already. So a big change that's going to impact any investor that's holding a property and with the 6 in the front still.
Yeah, well, you do see this. I mean, like back in the day, there was Steve McKnight, who wrote a book called 0 to 260 Properties, and he went into, where was it, Jeff Ballarat, I think, and there was like exactly this situation where you could buy property for, I don't know, whatever it was, 300,000, and then the stamp duty was up to 400,000. And what was it, Jeff? Whatever it was, it's just some
they're buying for like 80, 40 or 50,000, Joe. This is the year 2000.
Jesus, okay. Okay, yeah, true.
Well, the other thing that's helping that is we've got Key Start here, which is our sort of state, financing side for first home buyers, and their threshold is now increased to 730K that they'll finance purchases up to. So that's the other factor. A buyer only needs 2% deposit, and if you meet that, if you're a single and you're earning less than 148K,
so that's 14. You need 14 grand to buy a $730,000 property. Essentially, 15 grand. Save your heart out.
Still need the borrowing capacity. That's the. Yeah.
So certainly lowering, that. When I look around Australia, it doesn't seem like any other sort of state governments are doing as much to get people in, as that financing product does. They don't pay any lender's mortgage insurance, slightly higher interest rate, but what a lot of them do is after 4 or 5 years they refinance out to another bank when they've got the equity in there.
How is I guess one of the challenges that WA was faced with 2, 3, 4 years ago was the constraints around building, right? Like the building supply and building projects coming to market. It was COVID. There was a lot of, there wasn't a lot of lockdowns in Perth, to be honest. It was pretty open. Everyone from Victoria was going to Perth. But how have you seen that shift now? Like, are projects getting built? How is the supply side of things in the Perth market going now?
Well, there has been an increase in the building approvals and what's actually getting constructed over the last year on year over the last few years. But compared to our actual population growth, there's still a massive shortfall. And that doesn't even account for the first home buyers that are getting out of home and coming into the market as well. So there's a big deficit still. It was interesting. The Keystart have also released a new product, and I haven't seen anything like it around Australia as well, to fund modular housing for first home buyers. And they'll basically fund the build of it, the installation of it. It basically makes it very achievable for a first home buyer to buy a modular house. And hopefully we'll get some builders and some good competition to keep prices reasonable and have that as a good sort of housing option for the first home buyers to get in. But still, that's just new news as of like a week ago. So we don't yet really know, what sort of costs might they be looking at to get a house yet. So it's early days, but exciting for them.
Yeah, it'll be interesting for the land side of things, right? Like land will start to become an asset that all of a sudden, I mean, you've seen a jump up. Like, to be honest, 270. Exactly. See, this is where it starts to get interesting, right? 273 to 350 is not percentage-wise, an amazing, massive jump. 660 to 780 is quite nice. But now you're saying, well, it's becoming more affordable to buy a modular home and then just pop that on. So you're going to buy it for 350 and then what, 150, 200 grand for a fully set up, ready to go house, maybe 250. I don't know what the number is. I'm just making stuff up. But it's then you've got a 3-bedroom, not, the greatest, but that's far better than 780,000. So super interesting.
There'll come a time the cost of building has still outpaced the price of going and buying an established property. So virtually none of my clients are developing anything much. I can probably count on one hand out of that 1,100, clients that we manage properties for. We've over the last 6 months, maybe less than 5 have developed something. It's that quiet. I barely ever get even asked for a feasibility study because it only takes 5 seconds on the back of an envelope to look at the build costs, a quick, what are they selling for, and you don't even have to go too deep to work out. There's not enough margin in there to warrant doing it yet.
You're not building much for under 500,000 at any sort of decent quality these days of any decent size. So you think if you're purchasing a plot of land for 300. Chuck 500 on there, there's at least 800,000 plus any other ancillary costs. So it's not feasible to build. An interesting one. Yeah, an interesting one because we've had a couple of people ask about Kennington. And that's I've discovered an interesting, and it's a little bit small, make it a touch bigger. But I wanted to point this out because it potentially talks to you've got 700,000 the ceiling, and maybe it's just coincidental. It's not thousands of sales, but it gets to 700, and then it's taken a dip. Is there anything in that 700,000 limit? Do you think that's impacted Kennington?
I think that's completely coincidental, and no impact's been seen from that yet. But
okay, the trend's not long enough, is it?
Yeah.
Because it got to 680, went to 700, it's only 1 month. So
if we want to speak to Kennington, the biggest thing that holds that area back is it just doesn't have quality schools, and so it doesn't have the home buyers driving that market. And it is relatively close to Perth, and it's got Carousel, and it's got the train line. But my data prediction, I just jumped and had a look at, it's only showing 6 and 7% for Kennington and East Kennington over the next year as a capital growth prediction. So there's definitely
better. You say only. I mean, 700,000 on 6% is
49.
Still pretty decent.
Yeah, 42,000 on 6%. That's great. 700 is now 742, and then that'll compound. 6% is bloody great.
It's funny because I guess because I stare at suburbs all day long, I know we can do better than that. So don't go. It hasn't reached its peak by any stretch, but there's suburbs that are going to do better than that.
And there's another one that's come up, which I know would fit in that, and then we'll move to the next segment, which I think is probably the more interesting sort of segment, because you got those first home buyers that are now probably able to get into the market, but it's an area that we probably, some of us know a little. You probably know it, and you might not manage that many there. But it's Camillo. What do you feel about that's down in
Camillo? We do look after quite a bit out there.
Oh, I thought you didn't do too much south of the river.
No, we manage the whole of Perth, and we've got. I like to joke around that we've probably managed more properties there than we'd like to, Jeff.
Yeah, exactly.
It's far enough away from Armidale, though, Jarrad. You're not quite in Armidale yet. Yeah.
See, I reckon my data prediction is showing 8% for that over the next year, and I think that it has still got some run to go. The typical price there is 670, so it has shot up a lot.
massive jump up. I mean, 2 years ago, you could have bought stuff for 350, right?
Yeah.
Like, and it would be half enough decent. But that's why it was interesting, right? Like Jeff and I were chatting in 2021, 2022 saying, guys, why are you not buying Perth right now? Like, it costs way more to build these things. And it was 350, 400, now 800, 750.
Longer term, I'm not the biggest fan of Camillo, just because it's got a very low relative socioeconomic. So people are going to get to a point where they're not going to be able to afford to keep paying higher for prices, both rent and sale, and it's got to be approaching that, and that's probably the biggest thing that's going to hold it back. The affordability index is getting up there now as well, and that's going to hurt it.
You're talking a HA, affordability.
Yeah, one of the it was one of the questions I had was like, are there any areas where you see like arrears now, where things are starting to get to that affordability level where people are now like, no, I can't pay my like bloody rent. Obviously, you as a property manager, you vet a lot of people so that doesn't happen. But I know from the grapevine, you probably would have heard, actually, this area is starting to get a lot of people going to the court and having to get their rent. Like, where are you seeing, where are those areas? Where are some of the cautious areas? Not saying, don't buy there or whatever, but are there any areas that you're seeing that?
Yeah, for sure. Well, in good markets and bad, the areas like around Kwinana, around the the GBT, which is Girraween, Kandul,
isn't it KGB?
KGB,
Girraween and Bell.
So
I've seen them. Yeah,
that was two. We did a boots on the ground.
That's the three.
We did a big boots on the ground trip in WA, and the data looked fantastic, and we knew it was going to grow. We knew it was going to do well, but not sustainable long term. So we said no.
I mean, people have done very well there, and it's just going to be a lot harder in a downward market to sell and rent in those types of areas. And in addition to those. So we've mentioned Kwinana, we've mentioned the KGB, and then definitely out Armidale, Westfield way. It can be a struggle there as well. So
just I'll bring it up on the map just so people can have a little bit of context, because I realize we're talking a lot about stuff that we know, but maybe not necessarily everyone else knows. Yep. So the Perth market here is, and then down south. There's a little area called Rockingham, which is what this area is here. And this is the Kwinana area here, and then Rockingham down here. So there's a little pocket within here, which is this what you call it? Where do we call it KGB? This pocket.
No, that's
here,
north of the river. But that area around Kwinana is difficult.
You got Callisto and
Camellia.
Yep.
And Leader. So that's all lower socioeconomic and is harder to find quality tenants. What it means is like you can see that you're getting good numbers at your home open for rent still, but then and you might get all excited as a landlord that, hey, we've had 10 people apply. But if your property manager's actually going deep and vetting them properly, you'd be lucky to find one quality tenant out of 10. And so you have to do a lot of work to actually sift through and find the quality in those areas. So just be careful that your property manager's going that deep, because if they're not screening people properly and they're just putting them in, it's going to give you headaches later.
Yeah. Well, let's move on. Is the next segment, the middle segment, is that probably your favorite pocket of the market, Jarrad, or which?
That's what is heating up the most.
Yep.
And I'm predicting that there'll be like 8 to 15% growth over the next year there. In that lower segment, I thought 5 to 10% was, going to be fairly the norm. And keep in mind, I think if we get a few interest rate reductions, as we're probably likely to, we could see these, increase by even more. I'm thinking, because we've already seen the impact of that the first 2 rate reductions and how that's flowing back around into the market. So it's giving people a lot more confidence now that we know that we're not interest rates aren't continuing to increase. I mean, you must be seeing that across Australia as well.
Yeah, definitely.
So all the people that have had their equity increase in the lower end are starting to upgrade into the middle. And so if you've got the money for an investment and you want something that's a bit more quality, the 800 to 1.2 sort of price range in Perth is going to give really great returns over the next 2 to 3 years, I believe.
And what are the yields? What are we talking yield-wise? Like a 4%?
You're talking more 3.5% to 4%. So
still very good.
Yeah. When I compare what I'm seeing in Melbourne, I still fall off my chair a bit when I'm sort of comparing like good value buying in Melbourne, but the rental yields are still much lower than Perth for spending similar money. Yeah.
While we're on that capital growth and yield sort of play, Jarrad, and I imagine given that you've built a sizable portfolio yourself, how do you sort of think about that as an investor?
I think it all comes down to creating a plan that's going to work for you, because if you'd listen to any, I like to think, what is the person's vested interest in promoting a certain type of property price point or and I think I'm very agnostic, as in, like, we manage properties that are in the lower end, we manage properties that are in the upper end. I started out building my portfolio in the lower end because that's what I could afford, and it gave me the gains, and I value added on top of that as well with renovation and subdivision, just to a small scale. And that got me ahead and got me my leg up and gave me the money to put back into my business and grow that. And like, I wouldn't even be here with the wealth that I have today if I didn't start there. So I don't turn my nose up and say, only quality all the way. And, but what about those that can only afford 600K or 700K? Like, doing something and taking action is still better than sitting on the sideline and wishing that you had 3 years later or 4 years later when you can still find opportunity at the lower end.
Yeah, you got to be able to afford to hold the product, and sometimes the answer is, you know what, I can't buy in that market because I can't afford that yield, right? Like we talk about it all the time. You need to have cash and equity, borrowing ability and serviceability, and be able to afford the cash flow. And the cash flow one is one of the biggest constraints that a lot of people are faced with. So if it is negative $20,000 and it's the best market that's going to grow $100,000, it doesn't really matter if you can't afford that. So I'm sorry to say, you're going to have to go to another market and not get the 20% growth. You're going to have to go to a different market and get 5%, 10%, 15%. But 5% on $500,000 is still better than doing nothing. So you're still going to do well. Like, taking action is the most important thing out of it all.
And then, now I'm at the other end of the spectrum where, like, I've sort of rebuilt my portfolio with higher quality properties that I think my average price is 1.5 mil, and some of them are much higher than that. And the negative gearing on my portfolio is very substantial per year, but it's all relative. So as a percent of my total profits and income, it's still very low, and I could afford it, and I don't lose sleep at night over that. And I prefer more of my gain to come from growth because I'm not getting taxed on that. It's compounding, without me getting taxed on it. The extra income I don't need now. And,
it's coming.
It's coming later. Yep.
Maybe.
Yeah, when you're even more wealthier.
Well, I bought a lot of development sites as well. So by their very nature, they're lower in yield, but it gives me that option to develop them and change the use of it to being more of an income producing asset down the track when I want that income. And and so that's been more my strategy over the last few years. And the other thing is, people think, isn't it wonderful owning like lots of properties. Like anyone that's actually been a landlord, even if you've got great property managers, and I love having a property. My goal is to have a property with each of my managers, so I can see firsthand how good they are. And I'm talking about my team at Investors Edge.
Yeah.
Is it Hunger Games? Does somebody get if you're the lowest performing, do you end up going? Oh no, let's not.
We joke around about me being their worst landlord in their portfolio because I've got such high expectations. But I pay my bills and I agree to maintenance and I communicate quickly with them. But I'm pretty direct about what I want. So, There
we go. On that, I love the way you can really see how experienced you are with that answer there, because you've actually thought out and constructed. It's not purely about, okay, yes, go and buy only this type of asset. It's like you've transformed and that's met your goals and what you aim to achieve and what works for you and your lifestyle. So thanks for unpacking that. In that middle segment, are there any sort of interesting pockets where, because I haven't got people to put in comments, but
suburbs.
Is it probably north of the river? You're seeing a lot of concentration in those middle segment markets.
North is definitely very hot, and a big part of that is the schools. So if you just look at public school rankings, that's going to be a solid growth driver for the medium to long term, and it is definitely driving prices in the short term. So
wow. Just the school location. I mean, it definitely is a core focus for certain people, and it does become important. In some states, you can have, you get kind of quadrant like put here, and you have to go to that school. Like, there's no real way. Other areas there, the catchment, there it is, school catchment. So the catchment is here, but you can also jump out in and out of the other ones as well. And then there are other states and things where you can. You have to have a special reason. Like, my brother's going here.
Yeah, you don't have a choice here unless you go to a private school. No. Wow. There's some schools that don't have a specific and defined catchment, but surely it's the closest Bunnings. Yeah, Bunnings is a factor when you're renovating your house. Like, believe me, if you're sleeping on the lounge room floor and you need to do 3 trips to Bunnings each day because you forget stuff, it's a factor.
Has Guzman and Gomez made much penetration in the Perth market yet? Because
they have. I'm a
Okay.
big fan.
That's the real deal, Silla. Okay, cool. Well, I see in your slides that we're going to jump to affordability. I'm just cautious of time for the audience. So, guys, anyone that's in the audience, you've got someone that really knows Perth here. So throw in your questions.
And knows investing as well.
Exactly. It's not just tell me how great Perth is. It's like, show me how great Perth is.
Well, if you go back in time and listen to my podcast, I've told it as it is on Perth and warts and all, and that's what people like following it, because you can't hide the data. The data speaks for itself.
Exactly.
And let's take a look at this bit of data on this next slide, because I was actually pretty surprised when I rechecked this housing affordability and how it stacks up. This is based on a bit higher median house price than what I would have put us at, but it depends which source you go to. So I was quoting REWA before. CoreLogic's index is different. And, this is basically looking at average weekly earnings for a full-time adult and how that compares to the median house price and your typical weekly repayment. So there's the houses on the left and units on the right. And when I look at Perth, where our repayment to income ratio is 46%, and we're still one of the most affordable places to actually own a property and pay for your mortgage when you compare the high incomes that are here. And a lot of that's from mining and from mining headquarters being based here. A lot of tradies are doing bloody well for themselves, put it that way. So 46%, Perth's the third most affordable to still own a property, even though our median has jumped up by so much, and that is very notable.
I just think that's wild. Look at the Sydney 94% repayment to income, which tells me that there is people are living likely off. There's some sort of equity there.
Family wealth is two words for you, Jeff.
Cash.
Mum and dad helping you buy a house.
Yeah.
Yeah.
And this is what this is why like some of these high level macro numbers just don't really paint the full picture. Like 94%. Well, does that mean it means that
no one can afford to buy anything? But
no one can afford to buy anything. But people are spending $3, $4, $5, $6 million to do it. So it doesn't really, drive to real answers from the micro. It is nice to know from a macro, but it doesn't really tell you too much. But it does keep you, if you see crazy numbers like 38 Northern Territory, 38% to how much people can afford to buy. It's like, well, okay. Normal, like median of all of this number is like 50%. Okay. And now we're at 38%. We're at 46. We're at 44. We're at 53. Hey, it's getting interesting. Interesting that Melbourne's at 59 and on par with Adelaide. It's crazy.
See, I would have thought Melbourne, it just seems like their economy has stagnated and hasn't led to as much wage increases on average. So, like, say what you will, I just like to look at how all these sort of fundamentals, how they contribute to people's ability to pay more for rent and more for their prices when they buy. So I take it all with a grain of salt as well, Joe, and I think when we continue on with my slides, population growth is the other major thing that I look at as well, because it's sitting in the background. It's putting pressure, firstly, on the rental market, because people always rent. Majority of them rent when they come to an area. This is to December 24, because that's the population stats always lag, and that's the most current that we can get access to anywhere. But we still had the highest by percentage growth of any of the states, and you can see that there was a fairly decent net interstate migration. Big outflow going on from Sydney still because of that affordability factor. Victoria's only losing, not losing anywhere near as much now, but a lot going up to Queensland. And Queensland's still having a very high overall increase in terms of sheer number. And
new people leaving, and then new people, net overseas migration, so net interstate people moving from New South Wales to $28,000 people negative, and then WA 12,000 positive, 25 for Victoria positive, and the rest of the states negative.
So everybody's leaving. Everybody's leaving every state domestically except WA and Queensland.
All we want is WA and Queensland. A little bit of sunshine. Give us.
Well, it takes a bit of time to work out what's what once you get here, and people head to Sydney just because they've seen the Opera House and all the tourism buzz things, and they work out they can't afford to live there, so up they pack to Queensland, and we're getting a few over here to Perth as well. So
you got the quokkas, Jarrad, on Rottnest.
I love the selfie quokka. We had Katy Perry doing it last week.
Okay, so what's this? Explain this chart.
This is our future population growth projections. So this is just released in the budget for 2025-26. This is most current from Treasury. And they're projecting Perth to still have the highest over the next 5-year period as a percentage term. So this isn't just 1 year, this is 5 years looking ahead. So that is a pretty strong fundamental driver for us that's going to keep putting pressure on rents and housing as a whole. So yeah, Queensland, Victoria up there in percentage terms. We can see that Tassie, South Australia, NT all back down in lower rates. So interesting.
Super interesting. Yeah. I mean, these guys are pretty much on par when it comes to annual growth. Like that's 1.6. But in terms of actual net result, it is 555. Very interesting. Queensland just keeps going. Just keeps going.
And, we've got the Olympics up there that is also sort of adding that kind of buzz to things as well, like a factor.
Okay.
We've got an ace up Perth sleeves, the AUKUS.
Yes.
I have heard about the AUKUS, but do you think it's something that's going to continue to be built? Or is it out?
Tell us what the AUKUS is. What the hell is it?
Well, there is that media. It's the submarine infrastructure that's going into HMS Stirling and off the Henderson precinct, basically.
Yep.
So why this is going to be so big?
North or south?
Near, think Rockingham, south.
Closest to Rottnest, maybe, or just a little bit over.
Yeah. So around Rockingham, but it's going to benefit that whole area. And, big spend in terms of the dollars, and it's going to be much more drawn out over a longer period. It hasn't even started yet. So, there's different media as to, if hopefully our Prime Minister can meet up with Donald and we can get it cemented, because things are a little standoffish at the moment.
Did you see the headline? It was a fantastic meme. It was Albanese saying, "We don't believe that Australia should get tariffs. We should be at 0% tariffs, ... unless Trump thinks we should." Or something along those lines. Not a specific quote.
He's still trying to get invited to the White House at the moment, isn't he? So,
trying to get in there.
He's putting the hints out there. Can I get an invite? Can I get an invite? But,
can I ask an unrelated sporting question, Jarrad? And I think this will be out of my curiosity. The Perth Bears, is that a big no for you over there? Because surely AFL and cricket to a large degree.
I reckon it's going to be pretty hard to get cut through when we're diehard AFL.
The Perth Bears, how many times have they tried to set up a rugby league
trying to get
team?
it off the ground again.
It's
They've even got
horrible.
Mel Meninga. They've got a name to come and coach us.
As a North Sydney Bears tragic from back in the 90s, and sorry, Joe, I'm going to embellish me a little bit. It is actually a little bit sad to see them go over to Perth and take the name. But I'd be interested. I don't think it's going to last very long. But there you go.
I hope so.
Yeah. So I wanted to, Enrico Swear has said, so it's a hold for all market segments. Is that the sort of consensus? And of course we'll talk about the selling, but is that sort of?
I think that'll lead into our chat on when to sell, and it's going to lead in nicely about changeover costs in our next segment.
Yeah, I am cautious of time, so can we just go high? Does mining?
Yeah, let's go high level on some of these things, because skip over that. But I want to go back to this. So I think one of the biggest fears with people that own property in Perth is it going to crash like it did across 2016 to 19? And a lot of investors that held property here at that time, they've still got that sour taste in their mouth as to how difficult that period was.
14 years is a long time to hold a property.
Yeah, it was bloody difficult. It was like eating glass. And, people are worried about holding their property in Perth through that period. But what we need to understand is that we had a huge construction boom going on in the mining industry. And it's a very distinct phase of when the biggest projects in our state's history were getting built, and the manpower and the workforce that was needed to build those was unsurpassed. So when they then entered their production phase, we're in a lot more stable phase that did actually get us out of and has led to our comeback. But at two very different phases, we're not going back to the crazy construction phase, and we're in a much more normal cycle now. And I had Tim Reardon on my Perth Property Insider show, who's the chief economist for the Housing Industry Association, and he really shed a lot of light on how fundamental this is going to be for Perth becoming more like the other states with typical market cycles, and that no, we're not going to fall off a cliff and go down the toilet like we did in 2016 to 19, because that was very much from switching these phases. And if anything, now that the production phase is going, it takes more manpower to maintain the sites ongoingly each year because they get older, and a lot of the agreements are in place for our resources and our exports, and fluctuations in prices don't change things that much. And so a lot more confidence around this production phase, and that's very key to know, I think.
That was a very concise and logical answer, Jarrad. There's not a lot of hype, and I think, and the other thing that's interesting, if you look at the REWA stats for the listings of the market, on the market, you're still well below historic. I think you probably know better than most. The 10 to 12,000 roughly, correct me if I'm wrong, is around that sort of balanced in Perth. Yeah. And we're still sitting between you hover between that 4,500 or even down towards 4,000 at 4,000 and 5,000. So it's not, I expected it to tick up a little bit, but it's pretty stubborn at that 5,000 mark.
Yeah, it started to tick up a little bit across March, April, and then now it's tightened up again to low 4s.
Yeah.
So
I'm keen to unpack, should I sell my Perth property?
Yeah, let's go into this. Let's go into the numbers.
From a
Bring me up
financial
the slide.
Yeah. Before we do that, we're going to jump to the last sponsor, and then we'll dive on.
You've got to come back for this. This is
everywhere you look, someone else is making money in property except for you. Your mate, he just bought a house. It's already gone up $100,000. There's some bloke on Facebook. He's bragging about pulling in a 7% rental yield. Meanwhile, you're stuck scrolling real estate and Domain, confused as hell and having no idea about where to start. Or maybe you're that mate that's got $100,000 in equity. You have a few properties under your belt, but you feel stuck. You're unsure about how to scale without over-leveraging and not knowing what the next right move is. So why does it feel like everyone else has some kind of secret that you're missing out on? It's because they do. There's a reason some people keep stacking properties while others sit on the sidelines stacking excuses. There's a reason why some investors buy under market value while others pay too much. There's a reason why investors know the hot spots before there's any heat. And there's a reason that some people build $150,000 in passive income while others just spend years thinking about it. And it comes down to knowledge. And that's exactly why Jeff Miles and I, Joe Tucker, created the Level Up Property course to hand you the exact step-by-step process that we've used to buy over $100 million worth of property in today's market. We've built Australia's largest property investment community with over 80,000 members, and we help everyday investors secure hundreds of thousands of dollars in equity, all without wasting years of their life trying to figure it out the hard way. Making an uneducated decision on the biggest purchase in your life is just gambling with your future.
Stop it. Get some help.
And this isn't just another how to buy property course. Let's be clear though, this course isn't free. What? And neither should it be. This is our life's work. We've spent over 100 hours each on this course alone. Oh, babe. Okay, video number 3. Number 4 with million does... Fuck. Done. We've got decades of experience, millions of dollars in deals distilled into a repeatable process that you can take away for yourself. If you're looking for free advice, there's plenty of noise out there. You can go and find that if you'd like. But if you want real, actionable, step-by-step guided process that works in today's market, then this investment is going to change everything for you. By the time that you finish this course, you will have full confidence. You'll have every tool that you need to build an amazing portfolio if you act on it, right? Which is why we have mentoring built in. So we kick you up the butt to make sure that you're kicking your goals. So the real question is, how much longer are you going to watch everyone else making money in property before you jump in and start playing the property game properly? Because the sooner you start, the sooner you start winning.
We are back. I had time to have some banter about AFL in the comments. Apparently supporting going to the Dockers, the most successful team in WA at the moment by far, is blasphemy.
Oh, salt and wounds there for an Eagles supporter such as me.
It's okay. We'll give them a touch up this week over the SCG, I'm hoping. But anyway, so before we get into the selling, I want to know, because this is the question on everybody's lips and maybe why people are moving to Perth. What is the coffee like over there in WA? Is it drinkable?
It's bloody good. I think we struggle to travel because our coffee is so good here. So it's a big draw card.
A lot of sort of baristas with the beards, I imagine, and the trendy tattoos as well. So good.
Yeah. What about a Sunday at 3 p.m.? What is open? Has that changed? Is anything?
Not much in the CBD.
Yeah. But that is actually one of the things that is interesting about the Perth market, like from a 10-year perspective or a 15-year perspective, is how much it has physically changed and fundamentally became now an actual city rather than being what it was 15 years ago, where it was just like there's nodes and there was nodes set up. Now it's all kind of connected together and created a bit of an actual real place that people want to go to. So it's no longer that. But anyway, I want to know, should we be selling this sucker, and how should we be thinking about this? Because that is bloody super important as a property investor. So yeah, this is the page that we got here. What talk to me, Jarrad.
So look, everyone gets really excited about that gain that they could go and get in the next place that they're looking at, you know. And I wanted to go and do the numbers to work out what sort of returns I'd need to achieve compared to a passive buy and hold. So with a passive buy and hold on a property, you know, you can typically get a 5% growth pretty readily on a reasonable property. You know, you're going to be able to outperform that even too. But I modeled it on 5% passive buy and hold capital growth. I then looked at a lot of people that chase these cycles. If a typical cycle is sort of 7 to 10 years, if they're selling and being more active, assuming that you sold every 4 years in and out of a market, what sort of return would you need to achieve to counter all those buying costs, the selling costs, and the capital gains tax that you'd pay at your marginal rate if you're on a 30% tax bracket? And it basically came out to being you'd need a 13% return to break even with the 5% passive approach. And that's pretty big when you consider that's not just 1 year's return. You need to achieve that for every year consistently over the 4-year period, and then do it again the next 4-year period and the next 4-year period. So very hard to go and achieve, you know, 2.5 times the return to counter the more passive approach for holding.
And this is where it gets interesting for people that are buy and hold investors, that then, okay, well, I can take the equity out and use the equity, and then I take advantage of this. Exactly. I don't have the selling costs. I don't have the transaction buying costs. I don't have a new stamp duty. I can then take that $200,000 that I've made and then move that into the new market. That's where you are going to then see the most amount of success. But the challenge that we're now faced with as property investors is the borrowing ability and serviceability, and also the cash flow to be able to afford it at the current rate.
Yeah,
it definitely comes down to those things as well.
That's where your trust potentially can. They're not unlimited. Is a bit of a furphy. I would say more of an extension of your capacity. But it's interesting you say that, because if they're Jarrad, I'm going to paint a bit of a scenario for you. Let's just say somebody's completely sort of tapped out, or is making. Would you say, how would you feel about in a circumstance where somebody needs to then sort of liquidate? Is that maybe a case for selling? So is your thesis that if you're selling purely to enter into another market, that's probably, you might need to really crunch those numbers a bit harder?
I think you really need to think about that. Yeah. And you definitely want to use a buyer's agent and a highly experienced sales agent so that you're maximizing your exit and your entry.
Yep.
And if you go to the next slide, I've jotted a whole bunch of other reasons that I think are good reasons to sell. So if you've got concentration risk and all these are in Perth, maybe you want to de-risk that situation a bit, especially into retirement, or, you know, or if you want to rebalance your portfolio. I've got a client that I'm working with that when he was late to the party, and he's fairly, you know, he's a bit an older gentleman, and he's gone and bought, I think, 15 properties in Perth, and that's the only place he owns. So he has come to me and said, which of these do you think you'd sell if you were I? And I've gone and looked at the short-term prediction growth and where they stack up for medium and long-term sort of fundamentals. And we've gone through and put a line through 6 or 7 of them, and they're the top ones that he's looking to sell in the next 1 to 2 years, and we're then just going to refine the time we actually sell.
What did those 6 or 7 have in common that the other 6 or 7 didn't have in common?
Well, I've seen what happens when we're in a bad market and how difficult a property can be to sell if it's got certain attributes. So I sort of looked at the suburb level first, as in, is there land supply that's likely to keep coming on? Yes, demand's caught up with supply for now, but when you just pull up the map and see that there's a whole bunch of other land that is going to keep coming on, that for the medium to longer term has to re-come into the supply-demand scenario.
Yep.
Other things like certain properties are going to be be difficult to hold, as in you're never going to attract a good tenant, and they don't have an upside potential for development or any other. They're just going to be headaches. So, if they're poorly located as well, like
main roads and
can limit growth and finding a tenant. Like very difficult on a main road, very difficult adjacent to a school. These factors start to become very real when the market cools off. So if you're going to sell that type of asset, you want to be starting to think about timing it right coming up. What else have I got on my slide there? Well, then you think about your personal situation too, because go back. Yep. If it's going to enable your home upgrade, we invest to provide our lifestyle, which I think is how our generation thinks very differently to the generations above us. That they sort of were like scrimp and save, don't enjoy the journey. One day when you retire, you might have it good. In my mind, like you're investing along the way needs to provide and be a big tool for upgrading your lifestyle. And you have to keep it within check, because, if you go and buy a PPR that's out of control and you've got no ability to save, that's going to limit your investing and really, not enable you to do anything else, both holiday wise or investing wise. But a huge reason that I'm helping clients at the moment is if you're going to then, if you need to sell 1 or 2 investment properties, but you're upgrading into a higher price point that you're going to get even better growth on now in Perth, there's a lot of clients that are in that boat where they're Perth investors, and they're going to move from that sub 800 home into the next bracket up and get growth, real great growth on that next bracket up. So I'd look at what your opportunity cost is on your home as well, because that can be a great asset as well. And people, I think, just focus, purely on their investments, but your home is a really key consideration to what you're doing to grow your wealth as well.
Yeah, that's such a great point, actually, because this is one of the things I think has got a real opportunity for capital growth. If you live in an area that's affordable to be able to actually buy and where you want to live. But there are some great opportunities where if you live in an affordable area that's, 500, 600, 700, that is within a range of which you can afford to buy, and you can buy an ugly property, renovate it, add some value to it, ride a capital growth wave, and then sell it for, $200,000 extra equity. That's $200,000 tax free. Those actually, that's probably worthwhile.
That doesn't go into my equation, of course. I calculated.
Well, those are the costs, right, of selling. Capital gains tax, selling agent commissions, legal fees, like cleaning up the property itself, marketing the property as well. So they're the kind of main ones. And then on the re-entry side of things, you've got the stamp duty, you've got the legal fees for doing so, and then inspections, pest and building strata reports, and then buyer's agent if you end up using one of those for that. So it does get up there. But yeah, if you can do that whole renovation PPOR flipping, like I've seen so much success in that. Like,
just
incredible.
be careful though if you do it more than a couple of times too regularly, because then
how many times do you need to do it, Jeff? How many times
well,
do you need
I
to
mean,
make?
that's if you're doing it 3 or 4 times in 2 years, they might be like,
Yeah,
well,
yeah,
actually,
It depends on your frequency over what time
Yeah.
period. There's no hard and fast rule from what I've seen. Not accounting advice. Check with your accountant.
Yeah. I think it's starts to become pretty. Because that was one of these person's point about, to your point, just bought an Ocean Reef, which Ocean Reef is a lovely little part north of the river. PPR, not investment, still feel is a good investment, and that I think that just fits in your middle category. Up to, I think Ocean Reef, you probably need over $1 million these days, maybe a little bit more. But anyway, probably not
in that category.
Probably not buying Cottesloe unless you have a multi-million-dollar sort of income coming in, or sort of your Mossman over in Sydney, for example. But of course, everybody has to run their life the way they want to. The thing I wanted to mention there was, and you've got it on one of your slides as well, what are those ways that you can maximize those sales things? Because for me, it's probably staging, but yeah, what are those other really simple things?
I prepared earlier.
Well, you do need to do it strategically, and if you go and ask the local real estate agent who's might be managing your property, should you sell? The answer is usually always going to be yes, you should sell, because that's what they do. They want to get sales, so they don't even give any timing, any thought to timing with regard to the lease end date typically. And that is one of the key considerations, because if you go and sell any further than 8 weeks out from your lease end date, you're immediately limiting it to really only investors that will look at it. Home buyers don't want to wait around for a settlement, and they want to move into the property. So that's the golden rule. And here in WA, in pretty much all leases stand regardless of a sale across Australia. So you can always go and negotiate with your tenant and come to a compensation agreement, which we've done on many occasions. But ideally, you'd want to time it to being, you start your planning process 3 months out, you look at your suggested improvements, you get that presentation dialed in, you work out, are you going to sell with the tenant there or vacate them? And about 50% of our clients end up deciding to vacate the property. It's not that they're a bad tenant, it's just that it's not optimum for selling a lifestyle. So we want to sell. Staging can be wonderful to painting that lifestyle and having people buy into that, not just the property. And the trouble when a property is vacant is you walk around and see every imperfection that a property has. And because there's no furniture to just distract you or take your eye away or for you to get emotional about, staging is every property I've ever personally sold, I've used staging. It gets buyers into that emotional space.
Yeah, it's incredible as well. Like, if there was a real estate agent that I was dealing with, he's like, no, I have to get staging for this property because the floorboards, the stumps have all messed up, so that we got heavy furniture in so that it would press down on the stumps so you wouldn't feel the bounce when you walked over it.
Borderline dodgy, Joe.
It's a little dodgy, but the point
I'm not talking about purposely hiding stuff. I'm talking about selling a lifestyle and getting buyers emotional. And there's what investors need to understand, because they're so logical with their thinking that they often can't understand the difference between. I actually give people two prices when I appraise a property. There's the logical price, which is what all the sale data is based on, but we're trying to get into the emotional price, and that's where we have buyers competing for it and wanting to outbid each other and getting FOMO, and that's my job as a sales agent, to create that emotional.
So how much is staging? Like, how much should I expect for staging to sell my property?
4x2 here in Perth, you're spending typically around $4,500 for a 4x2. So that's a bigger house with 2 living areas, outdoor furniture, full sort of staged. 3x2, you're probably spending, about $3,000, and then less if. So 3 to 4.5 grand.
Okay, so 3 to 4.5 grand. And the problem with that stuff is that it's not your furniture. You don't keep the furniture. You spend the $3,000. You borrow the furniture for 6 months, and then you give it back. 3 months, 2 months, like whatever the campaign is, right? However successful it is. 6 weeks, is it? Okay, right. So $3,000 for 6 weeks of borrowed furniture. How much have you seen that it gets?
If it's going to give me 30K, Joe, I'll take a 10x return.
It makes a massive difference. So I've sold identical like you can't go and sell a property twice, right? And know exactly the difference. But I've sold identical apartments, like one after each other, and I got 15K more for the apartment that was staged and sold it quicker. And that's the closest to a
real world,
exact real world for like comparison. But I just see the difference that when you've got buyers much more excited, much more emotional, and you're getting that multiple offer situation, like that's where you can get a really exciting price for something and get much more than you thought. So
I want to know their staging. I think is one of those. I think it's starting to cotton on more in the market now. Suggested improvements though that return 3x. That's caught my eye quite a lot. What are those sort of things that we should be considering?
Well, you want to get things to an overall even standard, and often there can be one area or two areas that pull a property down and give buyers pause for thought or hesitate or hold them back.
Yep.
So the things that add the most value is landscaping, floor coverings, painting being the top three. And these are basic things, but when you've had a tenant in there for 5 years or 10 years, then these things aren't sharp. Like wear and tear has slowly eroded the property. And that's where doing these things can make a big difference and 3 times as conservative. Like with those top 3 things, you're getting back many times, sometimes 10 times what you'd spend. So those are the top 3 things. Blinds and window treatments and lighting. Lighting's a huge one. Doesn't cost much, but I regularly go in and we change out, globes as a basic thing. We put, downlights over kitchens or some pendants over them. Other things that add a lot is in kitchens, we go and put overhead cupboards in. If it's just it really turns the kitchen into being a lot more usable. We change out bench tops in certain price points. So if you've got a Laminex bench top, changing it out to stone can be well worth it. We're doing that on a couple of them at the moment as well that we're selling. So those are the things that add the biggest dollar. We don't usually go and do a big reno to a bathroom or a kitchen because typically it takes, in Perth at the moment with the availability of trades, it takes a long time to do it and costs a lot. You're not getting the 3x plus return. You're more getting 2x if you're lucky, and it changes the price segment of the buyers that can afford that property and might look at it as well. So typically for investors, we're doing everything except bigger renovations. But I do have someone that can do those if you're impartial to it.
Makes sense and stacks up, right?
Makes sense.
Actually,
if you've got a polarizing kitchen or bathroom, it can be worth doing it. The ones that are the greens or the blues or the pinks. And I've bought a few houses with those, and just you see them as a big opportunity because everyone shies away from them.
Literally. Yeah. And it's all of these things that as a property investor, I see as deals that I've made a massive return on. Lease timing ending with 8 weeks. Yeah, if I buy a property that has a tenant existing that's expiring in 6 months, you can negotiate so much harder because the vendor knows that they're not going to they're only going to get investors. And typically these deals are sold off market as well. So there's not a whole heap of bunch of competition. So tenant and vacant staging. Yeah, I mean, as soon as you see a beautiful owner-occupied staged property, I'm just like, I'm not even going to waste my time with that deal because I know it's going to get that emotional premium. Renovations, exceptional marketing. If the photos look amazing, you just know that the inquiry is going to be large as well. Creating competition, why ever sell off market? True, strong negotiation. That's the real estate agent, right? That's what you're talking about. You going in there and crushing it for the 100%. There are real estate. I mean, did we actually, how many, we didn't buy too many deals off of you because you're really annoying and you get really
I don't
good
sell
price.
stuff off market. I present it really well. You know.
Yeah.
And,
you ask for premium and then you come back and renegotiate. But it is good to buy off real estate
agents negotiate and it's not until you've bought enough properties that you realize the difference that they can make. And there's good agents to sell through and good agents to buy through. So I love, I look for what is a buyer's true best price rather than just taking the first price that they tell me is their best. And that alone can make a huge difference. And when I negotiate my sales, I give people feedback on whether they're going to miss out on the property and whether I've got offers higher than theirs. And I don't tell them the price of my other offers. So the gap can be very big that someone comes in over someone with. But people never say to me later as a buyer, I would have paid more for the property if you just told me. But the majority of agents do not even give buyers that feedback and do not come and push them once they've got a first price that they've told them is their best but I know that the true best can be many times higher.
Jarrad's pretty genuine. When he,
I get excited about just, but that's what I'm there to do, to help this. And the investors held the property, you've made the decision to sell. We've done all the effort to put everything in place to get buyers emotional. And then at the pointy end, I just want to get as much for them to move forward as possible. So, but the buyer's also happy because, they've been given that chance and that feedback to pay the extra, and they don't, if they want it, they can pay it.
Yeah. The hard part for buyers, right, is knowing if they're full of shit, right? Like a lot of agents say it when they don't actually have those other things. And I guess that just comes down to negotiation. But this has been an incredible session, Jarrad. Thank you so much for sharing all of the insights. Well over time, but are there any pressing questions in there, Jeff, that you...
We can do one or two, Jeff. We can do one or two.
Let's hit a couple of questions up.
As long as I know you might not even had dinner yet, so...
no dinner, and my little girls are waiting to, one of them needs to be put to bed in 5 minutes, and the other one...
So, Jonathan's asked this really tricky one, because I'll just say, Jonathan, it comes down to we'll consider what that market is looking like. You have to make your own decisions on what the tax and all that. Selling East Victoria,
a house or a unit, do you think?
I don't know. Jonathan, could you give us some feedback if it's a unit or a house?
Jonathan. But okay, well, let's jump to another question and come back to that one then.
Yep. Okay, this is not a simple question, but we'll ask it anyway because I think it's interesting and important. Everybody will get value from this. Originally from Perth, owned in Belden, now live in Sydney. So Belden's a nice little pocket. Been thinking of WA for investment again, but don't even know where to start. So I suppose for me, that question which has come in from, I'm trying to think. Can't see who it was from a while back, but I think that's an interesting one because for me, the way I sort of think about that is, well, what do you actually want to achieve? Like, what does buying in WA do for you, and what is your budget? Because that'll then drive where you start. And then once you go down, but where would you go from that, or would you start somewhere different, Jarrad?
I'd probably start with creating an overall plan and seeing how that property. What are you hoping for that property to give for you? And that's where I always start with myself and with the clients we chat to. So it's knowing what you can afford to hold, like what Joe said earlier as well. No point, not being able to sleep at night because you're so to the wall that you can't afford to hold your property.
Yeah, that's right.
And my general advice is buy the highest quality of property that you can afford to hold. So when I was starting out, that was the low end. Now I could afford to hold higher price stuff, and I preferred tilting more towards the quality. And so that's a good piece of advice, I think. And then
but also it comes down to timing of the market cycle as well. Exactly like what you said, right? The bottom end of the market right now is kind of stagnating, getting a little bit challenging. It's opening up at the 800 to $1 million. So I do think that you do have to think about that as well. I mean, I feel a bit sorry for investors in the bottom end of the market right now because it's so challenging. Sub $500,000. Man, good luck. It's very, very hard. Not saying it's not possible, but it is very challenging. But then, where we're seeing kind of values like 750, 800, in between 650 and 800, in between there is really where I'm seeing value. But again, you buy a property that's worth $2 million and it grows at 5%, and you buy a $500,000 property that grows at 6%, you're still far better off from a net perspective buying the $2 million one that grows at 6%. You just need to be able to afford to hold that, which is massive debt and income and all that good stuff. But anyway, we won't go into that.
Jonathan's come back, and this will be what we'll finish up as. So he said 4x2 house. He said wondering. So in terms of Victoria Park. I mean, I know there's a few units over there and townhouses, isn't there? So that's pretty close.
Data. What have you got?
Well, I'm thinking that it's going to do around the 10% over the next year. Hashtag showing 9%. I'm pretty on board with that.
Yep.
Ooh. So how much would a 4x2 worth be there?
Oh, it's going to be up there.
900 maybe.
But the typical price is pushing 1.1 there now for East Vic Park. So for a 4x2, it's probably going to be a lot more than that. It's probably going to be 1.5, 1.7, probably up that sort of 1.5 to 1.7, depending on how much land he's on.
Jesus, $90,000. Well, just 10% on that, right? It's just add it, get the decimal points out.
If that's the price point they're in, they're going to be more in that upgrader market where we're going to have people that are further out wanting to move into there. But I'd be asking him, what is he then looking to do? So if he's going to upgrade into the higher price points, as you just said then, Joe, if he's going to then control a greater asset that might not get as much growth in this phase of the market, but then we move into the next phase when the middle's upgrading more strongly into the upper, he's probably got more growth to miss out on if he's upgrading in terms of dollar terms, as you mentioned. So, but if it's an investment and they're just looking at getting out entirely, then go back to your reasons why. And the other thing is you don't want to always try and time the very top because it's very hard to do. So, we can look deeper at the signals and what's starting to happen to days on market and supply in the suburb. And those two factors are probably the strongest things to look at, I think, just from the metrics point of view. When we've still got heat in the market, we can get more of that emotional price. Whereas when the heat fully comes out,
getting that.
Yeah, you're not getting that emotional price from as many people competing. So case by case, I'm happy to give people input, and I do complimentary appraisals, and we can talk strategy. And if you do want to get one, there's the slide. Thank you.
This has been a great section
podcast as well. Yeah, heaps of insight.
I was going to say
Property Insider.
Yep. No, exactly. I was going to say, yep. It's not appropriate now. I was going to say Spotify. We still haven't got the 50 on our Spotify, but that's okay. No, go and how do people get? I'm going to ask Joe's question, and he's going to wrap it up for us. Jarrad, how do people get more of Jarrad Mahon from in their life? There's many ways and many things you do. How do people find out about you?
Well, Perth Property Insider, if you look us up on YouTube and all the podcast platforms. Just released my market update, which is much deeper dive than even some of this is. So that came out last week. So definitely worth checking that one out.
Yep.
Investors Edge Real Estate's my business. So if you do want a complimentary sale appraisal, you can go to investorsedge.com.au/appraisal. And that's probably the easiest way to chat to us about your sale options and strategy on that side. And then we're property management experts. So we're one of the most awarded in Australia. We've got over 1,000 5-star reviews on Google. So we're doing pretty well.
That's incredible.
Pretty well.
They get a lot of 1 stars often from upset tenants.
Yeah. Well, it's about respecting your tenants, isn't it? And treating them how you'd like to be treated. Because I was a tenant back in the day too. And God, the things that I saw from my property managers has left me scarred. So
It's true.
you can still give, keep tenants paying top dollar for rent and looking after their property, but you've got to respect them and communicate really well with them and get maintenance sorted really quickly, and then they're happy to pay the extra for their rental, and you get better returns for your landlord. So
there we go.
Love it. Great point to end on. Thank you very much for jumping on, mate.
Thanks
it's
for
been
having me
really, really good. Everyone loved it, I hope. And let's go buy a property, guys. Catch us later. Have fun.
So Perth might not have peaked yet.